Hello friends, welcome to the Trading Temple channel. Today we're going to analyze the STX coin, also known as STX, to see what its long-term and short-term targets are and to find out what it can do both in the short term and the long term. This coin has been in the market since around 2021, and in 2024 it managed to hit its all-time highs, which were close to $4. The lowest level STX has reached was around 20 cents, and right now, as you can see, the price is about 65 cents and it's consolidating heavily in this range. If we want to find the long-term targets for this coin, first of all, we need to look at the market cap chart. This is the market cap chart for STX, and what's interesting here is that if we want to find the long-term target, first I'll explain what a long-term target is, and then I'll tell you why it's like that. In the crypto game, it's very important to use Fibonacci when you want to find long-term or mid-term targets. This chart is not the complete chart for this coin. You can find the market cap in this form more or less on the CoinMarketCap website. On TradingView, it only has this part and doesn't have the earlier data. If we want to find all the targets, first of all, we need to mark the previous all-time highs, which were about $3.5 billion, and the lowest level was $234 million. If we roughly put these on our chart, that is $250 million as the lowest market cap level and the highest market cap level in 2021, then we can proceed, about $3.5 billion. And if we draw a Fibonacci from that point down to here, you could say it lines up nicely with where things are right now. And if we also draw a Fibonacci from its new all-time highs in 2024 down to the lowest point it hit in the past few months, we can say that we can find several targets. The targets aren't 100% accurate, but you could say they're an estimate of where the price might hit in the future. What you see here in this section is that STX will most likely stop. That's because here it has a 4.236 Fibonacci point, which is the full extension of the entire chart, and there's also a 4.236 point here as well. But the target I want to mention, since it matches with the 2.618 and the 4.236, is the best match, and it could possibly reach this target. From the current price to that level, you could say this coin could go up by almost 1,000%. And we analyzed the market cap chart because in the market cap, it shows that these types of coins are inflationary, and since new coins are released into the market every month, the market cap price differs from their price chart. That's why their market cap goes up while the price doesn't change, and that's why I say it could possibly go up by 1,000%. Why do I say this? Because this is extremely important at the 0.618 point in Fibonacci. I can give you 10 examples where this has happened before in crypto. One example could be Cardano. In 2021, as you can see, Cardano clearly tested this Fibonacci level in its market cap, got rejected, and entered a very big crash. And I can mention several other coins as well for which this area is very sensitive and they get rejected at this level. And this could also happen to STX. But STX will most likely face a lot of trouble because it has a very long way to go until that area which is full of resistance. Now, if we look at this area on the chart to see how much it can go up, on the chart it's almost 1,000% from the current price to the top. That 1,000% could take us to around $6 to $7 because every month new coins are released into the market. Here, I lowered the percentage a bit and it's possible that it could reach $6 to $7. Nothing is 100% certain in trading, and we need to remember that. This target is a long-term target. It's not clear when it will be reached. Now let's move on to the medium-term and short-term targets. First, let's look at the chart to see what STX is doing in the short term. In the short term, we can see that we are currently in a symmetrical triangle pattern, which is very sensitive. As you can see in this area, we're in a situation where it's still unclear what will happen, whether we'll go down or up. But it's very important that if we want to reach the higher target, this downward trend line needs to be broken here and move upward. And in this area, we currently have a short-term resistance right here. It's around 70 cents, and we need to break through this level, go up, do a back test on the trend line, and then move higher. In this area, we have a very strong moving average. We have the 50-day, the 100-day, and also the 200-day moving averages. You can see here where the 200-day moving average was broken and the price went down. Since the beginning of 2025, it still hasn't managed to break above the 200-day moving average. And this could be a very good catalyst if the price can break through this area and move higher. And in the next move, it will most likely reach here and fill the gap that was created here. And here the price can almost reach $1. It can almost reach $1, and it could even go up to $1.50, right? But in this area, we have a very strong resistance. As you can see, every time the price has hit it, whether from above, where it acted as support and caused very big bounces, and from below, it has acted as resistance. You can see that each time it hit this level, once here the price dropped by 50%, and another time here it dropped by nearly 40%. And as you can see in this section where it breaks out and moves up, then does a back test, there was another very nice bounce with the price going up by almost 200%. And in this area, things are very difficult for STX. If it reaches this area and gets rejected, whether by 50%, 40%, or whatever amount, things will become very difficult for it. What matters for STX right now is that we can almost determine its short-term or mid-term target. According to this chart, the pattern you see here, if we take the lowest level, which is here, and the highest level in this range, which is here, and when it breaks out, we can determine the minimum price target. Now, if we do this, see what happens. We take the lowest level up to the highest level, which is here, and when a breakout happens, though a breakout hasn't occurred yet. Now, let's say if next week, for example, a breakout happens, the price could go up to this area, which would be $1.50. And in this area, it's very sensitive. There are coins like Avalanche and Near Protocol. For example, Near Protocol is currently in this area, and Avalanche is in this area. You could say the next coins might be similar to such a coin. They can reach this area, and at this point, a decision needs to be made. Either we have a pullback here that comes to test this range and then goes up, or it forms a small flag right here and then moves up, which is exactly what Avalanche did. We have to see what happens in the coming week, and it's going to be very difficult for it to break through this area. Our midterm target could be in this area, but as I mentioned, this coin has some very strong resistances. One of them is the one we've drawn here, and the next one could be in this area, which is around $2.50 to $3. That's a very strong resistance, and it could face a lot of difficulty here as well. And if we look at the weekly time frame, things are getting a bit complicated because, on the other hand, the MACD is gradually turning red and it's losing its bullish momentum. And we need a series of big green candles for this momentum to return. And if we look at the RSI, we can see there's a very strong trend line here that has been touched several times. And this could also act as a catalyst so that when it breaks, it moves upward. If this trend line here also breaks and moves upward, in the next phase, it could go up to $1. And in the daily time frame, if we check the volume, we see that whenever we need this resistance to break, we need high volume. Look, in these areas, the volume has been very high and always in this section. But right now, we don't have anything like that, and we have to see if it breaks this trend line. In my opinion, the best scenario is for it to break with high volume and reach this area. And here it might test this area a bit, form a flag, or have a pullback of about 20 to 30%, and then the price could move up again. In my opinion, in the medium-term target, it could reach $2.50 to $3. It depends on when the alt season starts. The conditions are very good for crypto, and some good things might happen in the coming months. Because when I analyze the Bitcoin dominance chart, as well as the dominance of Ethereum and stablecoins, it shows that they are declining and altcoins might perform better. And I don't know exactly whether STX can reach $6 to $7 or if it will stop here at $2.50 to $3. It's very difficult. Its path is full of resistance. We have to see what happens in the coming months. For now, in the short-term time frame, this area needs to be broken. This trend line needs to be broken. This short-term resistance also needs to be broken. At the same time, this very strong moving average must also be broken, and the price needs to reach this level. Even when it gets there, it's going to have a very tough time with this resistance because at the same time we have the weekly moving average here, which perfectly aligns with this resistance. So it's a very difficult area and we'll have to see what happens to this coin. That was today's video. I'd appreciate it if you like and subscribe. And don't forget, I'm not a financial advisor and this is not financial advice. Trading is never 100% certain and everything is based on probability. Until the next video, goodbye.